When we're deciding what stocks to write about, we usually take into account what we're holding and what stocks we like, and of course, what our paying subscribers are interested in. So the people that pay the bills have a say in the stocks that we evaluate. So one of the firms that keeps coming up is Cloudflare stock, and in today's Cloudflare stock analysis, we're going to look at why this is a company that we wouldn't invest in. Now, before we get into that, I wanted to talk a little bit about bias when you're analyzing stocks. And there's the common domestic bias. This is where people will be prone across the world to invest in companies in their own backyard, things that they're quite familiar with. But there's also consumer bias. So people will love a brand and will want to invest in it as a result. So when I moved to Hong Kong, Cafe Corral is their fast food joint there. I found it to be just remarkable how good the quality of food is, though Hong Kong people will disagree, and how creative and innovative it was, and I wanted to invest in the company as a result. I've since learned that's not the smartest way forward. Familiarity bias, you see that a lot of people who smoke weed, when cannabis started to become legal, they want to invest in cannabis stocks. And there's political bias. We see a lot of this in the United States. Elon Musk has pissed me off, so now Tesla sucks. You have to be very careful about these forms of bias. In a recent piece we did on Facebook, for example, we've had a horrible experience with Facebook advertising, and we had to try to not let that work its way into our analysis. Facebook has enough problems that it needs to deal with us aside from our bias of using their product. Now, can analysts who use a product be objective? Certainly they can, and perhaps also they can offer unique insights into a company. And we happen to be users of Cloudflare's product, so I thought we'd start out by talking about why we use Cloudflare. So we distribute content not only on YouTube, but in written form. We've done that for a whole lot longer than we've had our YouTube channel. I think we have somewhere around 2,300 research pieces now. We need to distribute these across the globe very quickly in order to be discovered by search engines. So that's a concern. And of course, there's a concern around people who get pissed off at the things that we say. This can be typically meme stock cult members or individuals who are running pump and dump promotions. And when we say something they don't like, that makes them very angry. It cuts into their income. So we'll often have DDoS attacks. These are distributed denial of service attacks, and Cloudflare will protect against those. We chose Cloudflare because, well, I can't exactly recall the reasons, but it was there and we started using it. Now, we're currently in the process of building out a new website/platform, so we're vetting whether this is a vendor we want to keep. And in our unique circumstance, switching vendors is as simple as stopping the $50 a month payment that's going to our corporate credit card. So our first question was, well, how easy is it for other people to switch? And does Cloudflare largely cater to consumers that aren't paying them very much money? And it would imply that this is a commodity offering, and indeed it is. So what Cloudflare does is also referred to as a content delivery network, or CDN. This is a group of geographically distributed servers that speed up the delivery of web content by bringing it closer to where users are. So around half of our audience comes from across the planet outside of America. So we need to have that content distributed, made available where people are consuming it. Now, that description you're reading right there, that came from a firm called Akamai, and they're a dominant player along with Cloudflare and Amazon. And here, this chart from Intricately shows the top 3 providers of CDN services command 89% of the market share. So the first thing that you'll note here is this isn't a blue ocean. In other words, the usage of CDN isn't something new, and this is a domain that will likely become more competitive over time. Now, that's also backed up by this diagram from Gartner, which is the Magic Quadrant you may be familiar with. And up there at the top in challengers and leaders, you can see under the leaders square, you have Cloudflare and Akamai. And then on the challengers, you have Amazon Web Services. That's very concerning. So when we look at what Gartner MBAs have to say about these three companies, they say Cloudflare has a large customer base of small and mid-sized businesses, and what they refer to as personal customers help feed its global threat intelligence to detect attacks. Then you have Akamai, and they say especially suited for organizations that have a broad and diverse portfolio of web apps and APIs. In other words, large organizations. They provide excellent support, and that mid-market enterprises, the small and medium businesses, often prefer a less expensive alternative. So we know Akamai is more expensive. And the larger companies can afford that. Then you have Amazon, they say, suitable for clients looking for native controls, a platform approach, and vendor consolidation. That's very key. So CTOs these days, especially in the cybersecurity space, are looking to consolidate vendors not only to save costs, but because there's fewer people to blame when something goes wrong. So across organizations, vendor consolidation is something that happens, especially in bear markets when they start more closely scrutinizing who's being paid the money. So when we look at the cloud market, this is very interesting. There's a $130 billion cloud market, at least as of late several years ago. At the top there in terms of leadership, you see Amazon with close to a third market share. Behind them is Azure with a fifth, and then Google coming in close to 10%. So the fact that Amazon already has the largest cloud infrastructure in the world should be of a concern to Cloudflare that also wants to talk about their global infrastructure. What this might end up becoming is a race to the bottom. So in a bear market, all businesses suffer, but the first to go out are usually the smallest. That's a concern for Cloudflare, which appears to fall short for their larger customers in terms of support and usability. We can attest to the fact their product isn't very usable. Akamai said to be pricier, but their gross margins of 63%, that means they have room to start competing on cost. But so does Cloudflare with gross margins around 79%. So we could expect that these commodity CDN services become a race to the bottom, and who would likely win that race? Well, probably Amazon, because they have the infrastructure in place for their cloud offering that needs to be there to begin with. So offering an extra CDN service on top of that shouldn't take too much effort. So Amazon's global leadership in cloud computing with a close to a third market share means they're a formidable challenger. Now, when you look at competitive advantages, at least coming from the horse's mouth, Cloudflare says there's shared intelligence, fine. So anybody that has a large customer base enjoys that. Network scale, that isn't that much of a competitive advantage when you look at Amazon. And then they refer to ease of use. Well, it's not easy to use. They lack a central dashboard. They keep putting out these new bits of functionality that we really have no idea of the benefits. I mean, they talk about those to a certain extent, but then good luck trying to find out where they are in their convoluted user interface. This is a criticism that others have leveled at Cloudflare. So then the fourth bit, they talk here, no trade-offs between security and performance. Well, that's really a given. That's why we're using them for security and performance. So whether or not we continue to use them remains to be seen. But when we look at their customer base, this is quite interesting. They have this growing number of customers that pay them more than $100,000 in annualized revenues. You could see that on the left. So what we can then do is take this other chart on the right, upper right there, some other metrics they give us, and start to calculate things. So they say greater than 50% of our revenue comes from larger customers. Well, let's assume it's somewhere around 50%. Then if we break that out, they have 1,908 customers paying them more than $100K. So we can divide that $508 million, half of their last quarter revenues. That comes down to $22,000 roughly a month. So that's a reasonable amount of money for companies to be paying them. But then when we look at the other half of that equation, we have 154,000 customers. If we divide that out, on average, they're paying around $275 a month. That's not very much. So around, let's say, half of the revenues coming in are from customers who aren't contributing very much. Now, on the bright side, they have around close to half of their revenues coming from outside the U.S., which is great to see that international diversification. Now, a common SaaS metric that we look at for customers spending more over time would be dollar-based net retention rate, or NRR. And here you can see this reflected for Cloudflare. These are good, you can say pretty good numbers. This is around average for a high-growth SaaS firm in a 124% range. But then they have the other metric here, and props to them for providing it. Most SaaS firms don't, but they say gross retention above 90%. Well, let's assume that they would present that metric. If it was 91%, they probably say that. So let's assume their gross retention is 90%. That's not so good, and you can expect that when there's a lot of competition like Akamai and Amazon, that people are going to be switching vendors. So that's just another concern in this space. So to conclude, we prefer to invest in companies servicing what we call blue ocean total addressable markets. In other words, you're not having to displace competitors to grow. And Cloudflare, unfortunately, is having to do that, though they've found their niche in small to medium businesses, but they're offering a commodity service, and they face formidable competition. So how hard is it for Amazon to begin offering a competing solution, or Akamai? They could very easily craft their product offering to compete with Cloudflare. There's no shortage of quality SaaS firms out there for us to invest in. In fact, close to 30% of the stocks we're holding in our disruptive tech stock portfolio are pure SaaS, and an additional 13% have some SaaS. We love SaaS business models, and there's a lot of good quality firms to choose from. So just based on what we've discussed today, we're going to be avoiding Cloudflare stock going forward. So I've put up a video here that you might be interested in watching next, but before you do that, please click that Nanalyze logo there, subscribe to our channel, support us. Thanks so much for taking the time to watch this today.